We've got less than 2 minutes until the closing bell when we want to bring in our panel. We have Sam Stovall, Chief Investment Strategist at CFRA. We also are joined by Lisa Erickson, U.S. Bank Wealth Management's Head of Traditional Investments. But first, we want to get over to our markets reporter, Jared Blickery, for a closer look at some of the buying action into the close. Jared?
Well, we got all three of the majors in the green, but just barely. Nasdaq dipping into the red here. Worth reviewing a chart of the day, and we can see it gapped up here, had some strength, but it's just been selling off for most of the rest of the day here. Dow switched places with it. It began the day up, but not as much as the Nasdaq, and we can see it's still very close to session highs, up 1.5%, nearing in on 500 points. And pretty interesting price action here. I'm going to switch to the bond market. We had a big 10-year yield auction today, 10-year auction, and that went pretty well. So we see the 10-year T-note yield down 3 basis points. Usually that gives the impetus to buy tech stocks, but that's not really what's happening today. We're seeing semiconductors really weak, and you can see the mega caps, all of them now firmly in the red. Apple's off nearly 1%. Tesla down 0.75%. And just a quick look at the semiconductor space, because that's where we're seeing most of the weakness concentrated. Those losses accelerating. Micron, Lam Research still down over 4%. We have Western Digital nearing that amount. Qorvo and KLA down over 3%. Well, let's take a quick look at the sector action. Energy, the biggest gainer today, that's up 2.5%, followed by financials, materials, industrials. So value and cyclicals really outperforming here. And here is a closing bell on Wall Street.
All right, we have a closing bell, and here's where we are going to wind up settling in the markets right now. The Dow is going to close up around 1.5%. We're going to be up about 460 points when all is said and done. S&P 500 is going to be up a little bit over 0.5%, up 23 points. Nasdaq, though, Nasdaq is possibly going to settle in the red slightly, down about 5 points. And some of the stocks today that we were keeping an eye on, earlier we were talking about Tesla. Tesla had been positive, but it looks as if it's going to close down today, along with Apple. Apple's also going to close down today. And then, of course, there's AMC. We've been talking about AMC and their earnings. And, of course, AMC today is down, going to settle down about 6%. Let's bring our guests into the stream and talk about where all of this is headed. I want to start with you, Sam, and very simply, because there's been this real fear about inflation. And a note to your clients, you said the steep climb in inflation over the coming months will likely add to investor concern that the Fed may be underappreciating the upside of inflation and the risks with that. But just because you feel something is about to happen doesn't make it so. Are investors missing something here?
Well, not really. I think that investors have to be attempting to figure out whether the Fed feels that they're going to be behind the curve and whether they actually have to start raising short-term rates. But right now, what the market is doing is investing in anticipation of a steepening yield curve where the low end pretty much stays locked in, but the higher end creeps higher. Because whether you look to today's action since the recent high on February 12th, or the action since the most recent decline of 9.6%, which ended September 23rd of last year, it's exactly the same. It's energy, it's financials, it's materials and industrials that are the outperformers, whereas it's consumer discretionary, technology, healthcare staples that are underperformers.
Lisa, taking a look at where we closed today, we had the Dow of 462 points closing at a new record. I was going through your notes, and you say that you still remain glass half full on the U.S. equity market. What do you think is going to drive those further gains that we're going to see in equities?
Absolutely, Shauna. We do remain glass half full. And really the picture behind it is just that we're going to have continued economic progress. So on the back of the improving picture with vaccinations, as well as macro data that continues to show that it's rotating to the expansion phase, and then further reopening, we should continue to be able to have pickup in the economy. And in addition to that, we see that corporate earnings actually and sales are doing quite well. So they should be able to leverage that particular macro pickup and then be able to continue to generate some really nice operating results.
Lisa, I'm looking right now. The Russell's going to be up when all is said and done year to date about 16%. We keep talking about the rotation from, big tech to small cap stocks, more value stocks. Is there any concern that rotation is going to pull down the S&P in the next couple of weeks? Lisa?
You bring up a great point about, do we have maybe perhaps a leadership issue? And our expectation actually is that we will be able to see some continued momentum from, again, the more cyclical sectors and perhaps the mid and small caps. And in fact, we're actually advocating with our clients an emphasis on mid caps, precisely because they can do better in picking up on some of this economic momentum with their greater exposure to some of these cyclical names. And yet, when you look at mid caps overall relative to their large and their small cap brethren, what they really have historically is a very nice return risk pattern where they tend to outperform in terms of return, but are not hugely risky.
Sam, we've seen a lot of talk in the markets, and I think you and I spoke about it last time you were on the show, just about how we had this expectation, some investors, I should say, are expecting to see inflation this year. What are you anticipating, and how do you think the market will likely respond?
Well, I think the market right now is trying to figure out whether it should be happy with the expansion of the economy and just taking the increase in inflationary expectations and interest rates in stride. Our economists say that really we're heading toward the worst part of the concern, because by May, we probably should be seeing a 3.7% year-on-year increase in headline CPI, about a 2.3% rise in core CPI. And so that's certainly stronger than where we are today. But once we get through that second quarter of 21, which obviously has very strong comparisons with the anemic second quarter of 2020, we will start to moderate. So our belief is that we'll end up seeing a sub 2.5% full year core rise in 2021.
Sam, I got asked a question today by a friend who said, is it time for me to take some profit off the table? And I refused to answer it because I don't want to be wrong. So I'm going to ask you, but I'll give you an out here. What are the dangers for people who might, pull money off today, given all of the concerns that investors have regarding inflation?
Well, my father always told me, he said, Sam, Americans are optimistic by nature, so it's really not wise to be overly bearish. One reason, because if you're bearish and wrong, you're ridiculed. If you're bearish and right, you're hated. Also, while you might get out today, and that might be a correct time to get out, usually investors wait too long to get back in. So that traditionally is a problem. We've gone 189 calendar days since the last decline of 5% or more. This is actually below the average of 283 days between declines. So we really haven't even hit the average. So I would tend to say that we probably could end up seeing a digestion of gains. Maybe it's along that sell in May time period, but I would use that more as an opportunity to buy than I would to bail.
Sam Stovall, Chief Investment Strategist at CFRA. And of course, our thanks to Lisa Erickson, U.S. Bank Wealth Management's Head of Traditional Investment.